In today's world, where global markets are interconnected more than ever, the ripple effects of a single action can be felt across the globe. Imagine a country, one of the largest economies in the world, holding a massive stockpile of silver. This country is China, and it has quietly accumulated around 660 tons of silver. But what happens when that country decides to dump this huge stockpile into the market all at once? That is exactly what has happened, and it has raised a very big question. Why would China do this, and what impact will it have on the global economy? This question is more than just about silver. It is about power, influence, and the future of financial markets worldwide. The idea of China dumping 660 tons of silver is shocking. It could send shockwaves through global markets, shaking the foundations of the silver market and potentially even affecting other economies. But this isn't just about silver. It's about a much bigger game being played. The story behind this action is tied to an even bigger mystery, a warning given by none other than Donald Trump. Yes, the former U.S. president warned about something big, something that could happen in the world's financial system. He called it the $100 trap. The $100 trap Trump warned about is not just a catchy phrase. It's a financial trap that could create chaos in global markets. Imagine a situation where the value of a currency suddenly collapses, or a financial crisis that traps investors and everyday people alike, leading to huge losses. Trump's warning wasn't just about economic policy. It was about the hidden risks in the global financial system, risks that people rarely talk about. Now, with China dumping silver, many people are asking, is this the start of the $100 trap? China's decision to unload its silver stockpile raises serious questions. Why now? Why would a country like China, which has been carefully building up its silver reserves for years, suddenly sell it all off? After all, China's silver holdings have been a closely guarded secret for many years. They built their reserves quietly, making small and strategic purchases over time, and now they've decided to act. But why? What is behind this decision? Some experts believe that China's actions are a calculated move in a larger game of economic strategy. They argue that by dumping 660 tons of silver into the market, China could be attempting to manipulate the price of silver. A sudden increase in the supply of silver on the market could cause its price to drop dramatically, and that would have ripple effects in the world's financial markets. This could give China a strategic advantage. It might destabilize global financial systems, including markets that depend on silver prices. But it could also be a sign of something much bigger at play. What makes this situation even more intriguing is the fact that Trump, during his time in office, warned about something like this happening. He was concerned about the possibility of a financial collapse that would catch many people by surprise. Trump's warning about the $100 trap was not just about silver. It was a broader warning about the fragility of global markets. And now, with China's move to dump silver, it seems that the trap he warned about could be closer than anyone expected. But let's take a moment to think about what this means for ordinary people. How will China's actions affect someone sitting at home, checking their savings, or investing in stocks? If the silver market crashes, the consequences could be felt far beyond the silver trading floors. Investors, businesses, and even governments could be hit by the fallout. The prices of goods and services that rely on silver, such as electronics or jewelry, might increase. And let's not forget that silver is often seen as a safe investment when times get tough. So, if silver prices drop drastically, people who have invested in silver could lose a lot of money. Could this be the trap Trump warned about? This is where things get really interesting. The silver dump by China could have a much deeper impact than just a market correction. It could be the start of a larger shift in global economics. Silver, after all, is not just a commodity. It's also a symbol of wealth and financial stability. If China's actions lead to a collapse in the price of silver, it could signal a bigger shift in how wealth is stored and protected. China might be trying to control the future of silver, but in doing so, it could be creating a domino effect that could change the way the entire world views money and investments. And here lies the mystery. What's really behind China's decision? Is it about economics, politics, or something else entirely? Could China be preparing for something bigger, something that no one else can see coming? Or is this just a short-term move to manipulate the silver market for immediate gain? The reality is that no one knows for sure. What we do know is that this silver dump is a sign of something much larger at play, something that could reshape the future of finance as we know it. The question remains, why would China dump 660 tons of silver into the market? What does it mean for the global economy? And could it be the start of the $100 trap Trump warned about? These are the questions that everyone is asking. And as we continue to explore this mystery, the answers might surprise you. But one thing is for sure. This is just the beginning of a much bigger story that could change the world in ways we never expected. Imagine being caught in a financial disaster that you never saw coming. It's like stepping into a trap where everything seems fine, until suddenly, everything unravels. This is the essence of what former US President Donald Trump warned about, the $100 trap. But what exactly is this trap, and how does it tie into China's massive silver dump? The term $100 trap might sound mysterious, but it's actually a prediction about the potential collapse of global financial systems, and it has a very real impact on people's money. In simple terms, it's a situation where the value of a currency or an asset crashes, causing widespread panic and confusion. Investors lose millions, and ordinary people, who thought their money was safe, are left struggling to make sense of what happened. Trump's warning was about the growing risks within the global financial system. He pointed out that the world's markets were becoming dangerously unstable, with powerful forces operating behind the scenes that few people truly understood. According to Trump, if certain events triggered this instability, the consequences could be massive. And one of the key elements of this collapse could be an unexpected event, just like China's decision to dump its 660 tons of silver into the market. So, how does this connect to China? Well, in the world of commodities, silver holds a unique position. It's often seen as a safe haven asset, something people invest in when they want to protect their wealth from inflation or economic instability. Silver, unlike stocks or bonds, has been used as money for thousands of years. When times get tough, people flock to silver, and this creates a stable market for it. Now, imagine what happens when a country like China, one of the world's largest holders of silver, suddenly dumps a huge amount of this asset into the market. It would flood the market with so much silver that its value would plummet. This isn't just a drop in price. It could trigger a financial domino effect. As silver's value drops, people who have invested heavily in silver might suddenly find their investments worth a fraction of what they paid. The global economy could feel the shockwaves, especially since silver is tied to so many industries, from electronics to jewelry. And here's where the $100 trap comes in. The trap is not just about losing money in silver. It's about how a sudden, unexpected event, like China dumping silver, could lead to a much larger financial crisis. When the silver market crashes, investors may start pulling out of other markets. This could lead to a widespread panic, as people rush to protect their wealth from an invisible financial collapse. The $100 trap is a situation where people's assets, whether they're in silver, stocks, or other investments, lose value so quickly that it feels like they're caught in a trap with no way out. But why is it called the $100 trap? The name comes from the idea that when this financial crisis hits, it could drastically reduce the value of many things we take for granted, things like the dollar or other major currencies. In a worst-case scenario, it could lead to a situation where $100 today might have very little purchasing power tomorrow. This is the kind of economic collapse that Trump warned about, a situation where the value of money itself starts to evaporate. The $100 trap is a potential future where people's hard-earned savings are wiped out by a financial disaster. So, what can we expect if China's silver dump triggers this trap? First, let's consider how the world's markets are connected. Silver is just one piece of the puzzle, but when the price of silver drops, it could have a ripple effect. Silver is used in many products, from smartphones to solar panels, so a price drop could affect industries around the world. This could lead to lower production costs, but also to reduced profits for businesses that rely on silver. Additionally, as silver's price falls, investors might start selling off other assets they see as risky, like stocks, bonds, or even real estate. This could trigger a chain reaction that spreads across the global economy. Stock markets might crash, currencies could lose value, and people's savings could disappear almost overnight. The $100 trap would be in full effect. But there's an even darker side to this. Trump's warning wasn't just about silver or the economy. He was also warning about how this kind of financial collapse could impact everyday people. While big investors and banks may have the resources to weather a storm like this, regular people don't. If the value of money falls, it could mean higher prices for goods and services and wages that no longer match the cost of living. This is the kind of financial nightmare the $100 trap represents, a world where money is no longer reliable and people are left struggling to survive. The $100 trap is about more than just a loss of money. It's about trust. The global financial system is built on trust, the trust that money will hold its value, that investments will grow, and that businesses can thrive. If this trust breaks down, the consequences could be far-reaching. And the silver dump by China might just be the beginning. China's decision to unload its silver might seem like a small event in the grand scheme of things, but in reality, it could set off a chain of events that leads to the $100 trap. By manipulating the silver market, China could be testing the waters for a much bigger economic play. The ripple effects from this action could spread far beyond the silver market and into every part of the global economy. As the world watches closely, the big question remains. Could this be the moment the $100 trap begins? Could China's silver dump be the spark that ignites a global financial disaster? It's a possibility that no one can afford to ignore, and the answer might change everything we know about the global economy. Imagine this: a massive, invisible vault holding over 660 tons of silver tucked away in secret. Hidden from the public eye for years, this stockpile is more than just a collection of precious metal. It's a piece of China's larger economic strategy. China didn't just happen to accumulate this vast quantity of silver. It's part of a carefully calculated plan. But why? What was the purpose behind hoarding such a large amount of silver, and how does it fit into the global financial puzzle? The answer isn't just about wealth. It's about power, influence, and a hidden game being played on a global scale. The story of China's silver accumulation is one that has unfolded quietly over time. Unlike many other nations, China didn't broadcast its intentions to the world. Instead, it strategically built its silver reserves through secretive purchases, often buying small amounts behind the scenes to avoid alerting the market. Over the years, this stealthy accumulation led China to amass one of the largest stockpiles of silver in the world. But why silver of all things? Gold is often the go-to asset when nations want to build wealth, and it has long been considered the ultimate safe haven during economic uncertainty. Silver, on the other hand, is often overlooked. It's not as glamorous as gold, and it doesn't carry the same level of prestige. Yet, silver has many industrial uses, making it crucial in sectors like electronics, solar energy, and even medicine. Its demand is linked not only to its role as a precious metal, but also to its essential role in modern industries. This makes silver a unique commodity, valuable, yet volatile. China's decision to build up its silver stockpile wasn't just a financial move, it was a strategic one. By controlling such a vast amount of silver, China could influence global markets and gain a certain level of leverage. Silver, though often seen as a secondary asset, can have significant impacts when its supply and demand are manipulated. If China ever needed to influence the market or create a shift in global economic dynamics, it now had a powerful tool at its disposal. But this plan, though brilliant in its execution, comes with risks. Holding such a massive amount of silver isn't without its dangers. The value of silver fluctuates. It can be heavily impacted by economic events, global demand, and even political decisions. So, why would China risk its entire stockpile at once? Why dump 660 tons of silver into the market and potentially destabilize not just the silver market, but the broader financial world? To understand that, we need to dig deeper into China's long-term strategy and the subtle moves they've made over the years. One of the most significant moves China made in recent years was shifting away from the US dollar. For decades, the dollar has been the world's dominant currency, the backbone of global trade and financial transactions. But China has been slowly positioning itself as a challenger to this dominance, turning towards its own currency, the yuan, and encouraging other nations to do the same. In the world of finance, power lies in control over the flow of money and the assets that back it. So, could China's silver stockpile be a part of this larger strategy? Could it be a weapon to challenge the US dollar and shift the global balance of power? Many experts believe so. If China were to suddenly sell off a massive amount of silver, It could cause a ripple effect that destabilizes global markets. Such an event could make other countries question the stability of their own currencies and financial systems, especially if silver prices crash and trigger a broader economic panic. But there's another, perhaps even more intriguing, aspect of China's silver stockpile: its timing. For years, China's stockpile remained mostly a secret. It was only recently that the world began to catch on to the magnitude of their silver holdings. This raises the question, why reveal it now? Why dump 660 tons of silver into the market at a time when the world's financial systems are already under pressure from the COVID-19 pandemic, rising inflation, and political instability? Could it be that China is preparing for something bigger, something the world isn't quite ready for? Perhaps China's sudden move to release its silver stockpile is not about silver at all. Maybe it's about testing the waters, seeing how the world reacts, engaging the reactions of global markets and governments. The silver dump could be a trial run for a much bigger economic play. China may be laying the groundwork for a future in which it can challenge the dominance of the US dollar and establish itself as a true economic powerhouse. Silver, after all, is not just a metal, it's a tool of financial power. But there's also the possibility that China's decision to release its silver stockpile is simply about getting ahead of a coming financial storm. Perhaps they see the writing on the wall. Global markets are shaky, inflation is rising, and there's uncertainty surrounding the future of the dollar. By dumping their silver reserves now, China could be preparing to weather the storm with a strengthened position. It could be a move to safeguard their own economy in the face of an impending financial crisis. This is where things get even more fascinating. While the rest of the world watches China's actions with a mix of curiosity and concern, China's true intentions remain unclear. The silver dump might just be a piece of a much larger puzzle. In fact, China's silver strategy could be part of a carefully orchestrated plan to reshape the future of global finance. The hidden part of the puzzle is this: China might not just be preparing for a short-term gain. They could be preparing for long-term domination. By controlling a critical resource like silver, China could position itself as the leader in a new financial system. Whether through the yuan, gold, silver, or other assets, China's goal could be to establish a new world order where the old powers no longer hold sway. The backstory behind China's silver stockpile is a tale of strategic planning, patience, and a careful understanding of global economics. It's a story that's been unfolding behind the scenes, out of the public eye. But now, as China makes its move to release its silver into the market, the world is left wondering, what's next? Could this be the beginning of China's larger economic plan? And how will it reshape the financial future of the world? The world has watched in stunned silence as China made its move, releasing 660 tons of silver into the global market all at once. The immediate question on everyone's mind: what happens next? This isn't just a routine trade or a simple market shift. No, this is an economic maneuver with the potential to set off a chain reaction, one that could shake the foundations of global finance. The dump isn't just a move. It's the opening of a door to an uncertain future. In the world of commodities, silver might not always steal the spotlight like gold, but it plays an essential role in the global economy. Silver is used in everything from solar panels and electronics to medical devices and jewelry. It's a metal that is critical to both the industrial and investment sectors. So, when China decided to flood the market with 660 tons of it, it didn't just affect silver traders. It affected industries across the globe. But how? The first thing that happens when a large amount of silver hits the market is a dramatic shift in price. As the supply increases, the price begins to drop. This is basic economics: too much supply, not enough demand. The more silver China sells, the more the price is likely to fall. But it's not just about the immediate price drop. It's the psychological impact of such a move. The market becomes flooded with uncertainty. Investors start asking themselves, if China can dump 660 tons of silver, what else might they do? This uncertainty alone is enough to send ripples through global markets. The silver market isn't just about the metal itself, it's about trust. When a country as powerful as China moves so suddenly and with such force, it makes investors question the stability of their other assets. What happens if China decides to offload other reserves, like gold or rare earth metals? How far-reaching could their influence be in global markets? The flood of silver could trigger a domino effect, causing people to question the stability of other precious metals, currencies, and even stocks. At first glance, the silver dump may seem like a minor event in the grand scheme of things, but the consequences are far-reaching. As the price of silver drops, companies that rely on silver for manufacturing could see their costs drop, and while this might seem like a win at first, it could also spark a race to the bottom. Companies will try to stockpile silver at cheaper prices, hoping to profit from a future price recovery, but this only accelerates the market's instability. What happens when everyone rushes to buy silver, thinking the price will rise again? It creates a volatile environment, one that is difficult to navigate. But the effects don't stop at the silver market. What happens in one market often has a ripple effect in others. As silver's price crashes, the currency markets will be watching closely. Will countries that rely on silver or have large silver reserves start to panic? Will the US dollar, which has been the world's reserve currency, start to lose its value as investors look for safer assets to park their money in? Could the dollar's reign be coming to an end, just as Trump warned? And there's more at stake here. When the value of silver drops drastically, it creates opportunities for large investors, hedge funds, and even governments to scoop up the metal at bargain prices. This is where the real game of power comes into play. While ordinary investors may panic and sell off their holdings, the biggest players are watching closely, ready to swoop in and buy silver at discounted prices. This could consolidate even more power into the hands of those already controlling large amounts of wealth. Those who have the resources to weather the storm are often the ones who profit the most from it. But let's think about the ordinary people, those who might not have access to insider information or large amounts of capital. For them, the immediate fallout of China's silver dump could be catastrophic. If silver prices drop too quickly, those who have invested in silver as a hedge against economic uncertainty could find their investments losing value. This isn't just about million-dollar portfolios. This is about people who put their savings into silver, hoping to protect themselves from inflation or market crashes. And suddenly, it's all gone. At the same time, the industries that rely on silver, electronics, energy, and even healthcare, could experience major shifts in their pricing structures. A cheaper silver price might make some products more affordable, but it could also create supply chain issues. What happens when companies that rely on silver start losing money because their product costs are too high? What happens when manufacturers cut back on production or even lay off workers? The global economy could begin to feel the strain, especially in sectors that are already under pressure from the pandemic and other geopolitical tensions. So what happens next after China dumps its 660 tons of silver? The effects are not immediate, but they will be long-lasting. The silver market will experience significant volatility, and other markets will likely follow suit. Silver prices will likely remain in flux for the foreseeable future, but the question is, how long will it take for the dust to settle? And when it does, what will the new landscape look like? Will China have achieved its goal of shifting the global balance of power, or will the world find a way to recover and move forward? This is where the true mystery lies. The moment of the silver dump is just the beginning of a much larger story. As we watch the world react to China's bold move, the true scope of what's happening may take time to fully reveal itself. What seems like a simple financial maneuver could have much broader implications than anyone could have anticipated. As the dust settles from China's shock silver dump, the question everyone is asking begins to take shape. Could this really be the $100 trap Trump warned about? This isn't just about silver, or even about China's sudden market maneuver. This is about something far more insidious, something that could catch the entire global financial system off guard. What exactly is the $100 trap, and why should it matter to you? To understand the real danger, we need to dig deeper into what Trump was warning about when he spoke of the $100 trap. The warning wasn't just a political soundbite, it was a financial prediction, one rooted in the vulnerability of our current global system. The $100 trap isn't just a fancy term for a market crash. It's the sudden collapse of a system that most of us rely on, one that many of us take for granted: our currency. The $100 trap is a scenario where the value of the money we use every day plummets so quickly that $100 today might only buy what $10 used to. It's a situation where inflation spirals out of control and the purchasing power of currencies like the dollar evaporates in a matter of months. To the average person, It's a nightmare scenario where their savings, their retirement funds, and even their paycheck no longer hold the same value. And while this may sound like something out of a dystopian novel, Trump's warning wasn't based on imagination. It was based on economic realities. Now, let's connect this to China's silver dump. At first glance, it might seem like a purely market-driven event. China unloads tons of silver, causing a drop in its value, and the markets shake a little. But the real danger here is much deeper. China's silver dump could be the spark that ignites a chain reaction of financial instability. As silver prices drop, investors and institutions that hold vast quantities of silver could face massive losses. When these investors start scrambling to protect their wealth, the domino effect could send shockwaves across other markets, stock markets, real estate, and even the global currencies we depend on. But it's not just about silver. Silver is a key component of the global economy, but it's not the only one. As China's silver dump destabilizes the market, it could lead investors to turn away from other assets they consider safe, like the US dollar. This is where the $100 trap comes into play. If enough investors start pulling their money out of US assets, the value of the dollar could plummet. And when the dollar drops, everything tied to it begins to feel the effects. Imagine for a moment that the value of the US dollar loses 50% of its worth in a very short time. The dollar, which has been the world's reserve currency for decades, would no longer be the safe bet for global trade. Countries that hold large reserves of dollars might begin to question their holdings. They might sell off their US assets in an attempt to avoid losses. In this scenario, the $100 trap becomes real, and the world could face a financial meltdown of catastrophic proportions. Now, it's important to realize that this is not just about a single currency or even a single market. When the dollar's value drops, it doesn't only affect US investors, it affects everyone. For countries around the world that hold US dollars as part of their reserves, this would be a disaster. Those countries would see their own currencies devalued in relation to the dollar. This could send prices for goods soaring and push inflation in a hyperdrive. For everyday people, it's a situation where their wages don't stretch as far, and what they used to buy with $100 now costs $200 or more. This is the very essence of the $100 trap, a situation where the purchasing power of money collapses and the world is left scrambling for stability. But the real question is, how could China's silver dump trigger such a global collapse? The key lies in the interconnectedness of global markets. Silver, though not as heavily traded as oil or gold, is still a significant part of the global financial system. Its price affects everything from industrial production to the manufacturing of everyday goods. When China dumps 660 tons of silver, it doesn't just affect silver investors. It sends a signal to the rest of the market that something bigger is at play. As investors begin to panic, they could start pulling their money out of riskier assets, like stocks and bonds, and seeking safer investments. But as these markets become flooded with uncertainty, even the safe assets, like government bonds, start to lose their value. The $100 trap doesn't just happen overnight. It's a slow burn. It's the gradual erosion of confidence in global systems that seem stable but are, in reality, fragile. If silver's price drop leads to a wave of panic, it could mark the beginning of a larger breakdown in global financial systems. As money flows out of traditional safe havens, countries could struggle to stabilize their economies. And once the confidence in the dollar, or any other currency, begins to crumble, it's hard to stop the chain of events that follow. This is the true danger of the $100 trap. It's not just a sudden crash, but a slow-motion disaster that impacts everything from your grocery bill to your retirement savings. The warning Trump gave is not just about silver. It's about how fragile our financial systems are, and how a seemingly small event, like China's decision to dump silver, could lead to something much bigger. In the end, the $100 trap is a reminder of just how precarious our global financial systems are. What seems like a small event in the market today could lead to much larger consequences down the line. The silver dump might just be the beginning of a much more significant economic shift. And if the $100 trap becomes a reality, we might look back at China's silver move as the moment everything started to change. When Donald Trump spoke about the dangers of global financial collapse, many saw it as an overreaction. He was known for his bold predictions, his blunt warnings about the fragility of the global economy. But what if his warnings weren't just political rhetoric? What if Trump's concerns about the $100 trap were not only real, but had already begun to unfold? China's sudden silver dump might not be just a coincidence. It could be the moment that proves Trump's predictions correct. Back in 2016, Trump's warnings about a global economic storm were seen as controversial. He talked about how the US was too heavily reliant on debt, how other countries like China were gaining power, and how the world's financial systems were not as stable as they seemed. But it wasn't just about the US. He spoke of a global financial reset, a collapse of the very foundations of the world economy. And central to this, he mentioned the idea that the dollar could lose its value, that trust in currencies could evaporate, and that events like these would set off a chain reaction, causing widespread panic. At the time, many thought of Trump's words as exaggeration. But with China's move to release 660 tons of silver into the global market, the very scenarios he warned about seem to be playing out before our eyes. The silver dump is more than just a financial maneuver, it's a warning shot. It's as if China, through this bold action, is testing the limits of global financial systems. Trump's fears about global instability and the fragility of currencies may have been right after all. But how does this tie into China's strategy? Let's first look at the larger picture. For decades, China has been positioning itself as the world's next superpower, not just in terms of military or political influence, but also in economics. Over the years, China has steadily been distancing itself from the US dollar, working to make its own currency, the yuan, a global competitor. By accumulating vast reserves of gold, silver, and other critical resources, China is trying to build an economic foundation that's less dependent on the US or the Western financial systems. This is where the silver dump fits into the puzzle. It's not just about destabilizing the silver market. It's about creating a ripple effect that could shake confidence in the US dollar, in global trade, and in the entire Western-backed financial order. Trump's warnings about China and its growing influence were not just about the competition between two nations. They were about the potential shifts in global power. If China, as the world's largest holder of silver, decides to flood the market with this metal, it sends a message: we can control markets. We can challenge the status quo. This might be China's way of testing the world's reaction, seeing how the US and other nations respond. And here's where Trump's warning hits home. If China can manipulate the silver market, what else could they do? Could they turn their sights to other key commodities? Could they engineer a global financial crisis that forces the world to rely on the yuan instead of the dollar? It's also important to remember that Trump didn't just warn about China in isolation. He warned about the global financial system as a whole. The silver dump could be the first domino in a much larger series of events that could disrupt financial markets worldwide. A significant drop in the price of silver could lead to panic selling, destabilizing other markets, including the stock market, real estate, and currencies. If confidence begins to erode in one market, it could quickly spread to others. This is exactly what Trump was talking about: the possibility that confidence in currencies, especially the dollar, could collapse. What makes this even more concerning is that Trump's warning wasn't just about the actions of one country. It was about how interconnected the world's financial systems are. If China's silver dump triggers a collapse in silver prices, it doesn't only affect China. It affects every country that uses silver, every investor who holds it, and every industry that depends on it. The ripples could spread to the US economy, Europe, and beyond. The $100 trap, where the value of money collapses and hyperinflation takes hold, would not be confined to China. It would be a global phenomenon. And as China makes these calculated moves, we need to consider the possibility that this is just the beginning. The silver dump could be the opening move in a much larger game. China's strategy isn't just about short-term financial gain. It's about positioning itself for the future. By manipulating global markets, China could set the stage for a new financial order, one where the yuan takes the place of the dollar. Trump warned that China's growing power could undermine the West's economic dominance, and the silver dump may be the first step in that process. This is where things get even more complex. If the silver dump leads to a loss of confidence in global financial systems, it could result in a cascade of events that affects everyone, regardless of whether they are directly involved in silver markets. Just as Trump predicted, A major financial crisis could start with something as seemingly small as a dump of precious metal. The global economy is like a house of cards. If one card falls, the entire structure can collapse. Now, as China pushes the boundaries with its silver dump, we are left wondering, is this the beginning of the unraveling that Trump warned about? Is this the moment when China makes its move to reshape the financial order and challenge the Western-dominated world economy? The stakes have never been higher, and the answer to that question could change everything. The silver has been dumped. The markets have trembled. The world is watching. But the question now is, what comes next? While the immediate shockwaves of China's 660-ton silver dump are still rippling through the financial world, the real impact of this move may not be fully realized for months or even years. What we do know, however, is that this is not just an isolated incident. It's a potential turning point in the global economy. The future, shaped by this moment, could unfold in ways we can't yet predict, and the consequences might reach far beyond the silver market. The first thing to consider is the immediate aftermath. How long will the markets take to stabilize? The silver market is inherently volatile, but this sudden surge of supply could keep prices low for a while. If the price of silver crashes and stays low, industries that rely on silver, electronics, solar panels, and even medical devices, might initially benefit from cheaper production costs. Companies might rejoice at the cost savings, but the broader economic picture is far more complex. What happens when companies stockpile silver to take advantage of low prices? It creates an artificial boom that, eventually, could lead to another bust. The uncertainty in the market could be the calm before a much bigger storm. As silver prices remain volatile, investors will likely shift their focus. Some might see the silver dip as an opportunity to buy low, while others could flee to safer assets like gold or government bonds. But here's where things get interesting. As people rush to secure their wealth, they could inadvertently contribute to the very instability they're trying to avoid. The more money that flows out of silver, the more the demand for other commodities and investments could rise, potentially leading to a ripple effect across global markets. This would put central banks under pressure to act. They might intervene, trying to stabilize markets, but their efforts could be a double-edged sword, risking even greater instability. In the longer term, we have to ask, what does China's silver dump mean for the future of global finance? China's actions could be seen as a warning, a signal that the global financial system is no longer in its previous form. It's a challenge to the established order, a message that the world's economic powerhouses need to rethink their strategies. The silver dump could be the beginning of a larger pattern of economic shifts, with China moving strategically to undermine the dominance of the US dollar and take control of key global assets. The real question here is whether this is just the tip of the iceberg. What happens when China starts moving on other fronts? The silver dump could very well be a trial run for more disruptive moves to come. China has already made it clear that it wants to establish itself as a global leader, not just in manufacturing or trade, but in finance as well. If China succeeds in manipulating the silver market without suffering major consequences, it could use similar strategies to challenge other markets or even currencies. The yuan could rise as a global currency, reducing the dollar's influence on international trade. The economic landscape could change dramatically, shifting power away from Western nations and toward China. But there's another, even more complex, scenario. What happens when the trust in currencies, any currency, begins to erode? Trust is the foundation of any currency. If people start to lose faith in the stability of the dollar, the euro, or even the yuan, the effects could be catastrophic. The $100 trap, which Trump warned about, could become a reality. People could start seeking alternative forms of wealth, assets like gold, silver, or even cryptocurrencies, while abandoning traditional currencies. Governments and central banks could find themselves powerless to control the situation. In this environment, inflation could skyrocket, and the value of money might collapse entirely. For ordinary citizens, that would mean a dramatic loss of purchasing power as their savings, pensions, and wages become worthless. However, it's not all doom and gloom. The future could also bring opportunities for those who are prepared. If the silver dump does lead to a major market shift, there will be industries, individuals, and nations that adapt to the new landscape. Those who can read the signs of the times, who understand where the world is heading, could find themselves in positions of power. We've seen in history that financial crises often create new industries, new forms of wealth, and new opportunities. The question is, who will seize these opportunities? One thing is certain. The next few years will be crucial in determining how the world reacts to this unprecedented economic move. Governments, financial institutions, and ordinary people will have to adapt to the new realities that are being shaped by China's actions. Global trade could become more fragmented as nations align themselves with different financial powers. The dollar might lose some of its dominance, but new forms of global cooperation or conflict might emerge. As we look ahead, one thing remains clear. China's silver dump is not just about silver. It's about the power to shape the future of global finance. This moment could very well be the first step in a new chapter of global economics. And as history has shown us time and again, the road to change is rarely smooth. It's filled with uncertainty, volatility, and unexpected twists. For now, we wait and watch, knowing that China's move may only be the beginning. What comes next will shape the financial landscape for generations to come. Will the world emerge stronger, or will it fall into the chaos of a financial system teetering on the brink? Only time will tell.